All right. Looks like we're going live here. It's funny. I just went. I thought I was live for the last hour with you guys, and turns out I was only on TikTok live. So let's see if we can't get some viewers on here. And what I'm really looking to do is I want to talk about the biggest financial mistakes that I have seen in the last 25 years of being a financial advisor, and then what you can do about those different mistakes. So let's see if we get some people online here. And as long as I get some people online, I'll start talking about some financial mistakes that I've seen after being in this business for 25 years, and what I think that you can do about them. I will also get you involved or let you know about a huge discount that I have going on right now. I am going to, for the next 72 hours, I have two courses. The first course is the Invest Like a Pro course. The other course is Intermediate Investing. Both of those courses, I'm 96% off for the next 72 hours, or the first 1,000 people that purchase those courses. And the reason I'm doing that is I do not want money to be a reason that people don't take advantage of having a proper financial plan, and then really learning how to avoid major bear markets, and really understanding how easily you can avoid most major bear markets. So first, let me explain a little bit about what what the major mistakes are in financial planning. What have I seen in 25 years of finance? What have I come across as a financial advisor and an investment professional over the last 25 years? And I'm going to tell personal stories, real clients. I'm not going to give their names, obviously. I'll share some details with them about them, and the first thing is going to be this. So in 25 years, what's the most common mistake that I have seen? One, people think that either they have more time than they do, or they've run out of time and all hope is lost. So the view around time, the idea of time in which people operate with their finances, investment, and financial planning is wrong. They either think it's two types of people, right? You have spenders and savers. First person thinks they have more time than they do, and the second person thinks that there's not enough, they've not saved enough, and there's absolutely nothing they can do about it. So that's your first. That's the biggest mistake I see, is a misjudgment of time. Either you think you have more than you do, or you don't realize that you have plenty of time and you do not need to be panicked, and you do not try to need to skip steps in your financial planning and investment planning. You don't need to skip steps, and you are fine. The second thing that I see is that people are either they are mistaken with the money they're going to give to their children or grandchildren. So they mistake the fact that they've made all this money and now they are going to set their children and grandchildren up to live a better life. They think that that is what their children and grandchildren will do with the money that they are going to inherit. But I have something to tell you, and that's not true. And I'm going to share a very interesting story about a couple that I knew that were already in decent shape and inherited quite a bit of money, and they had spent it all in 15 months, and they had effectively driven themselves into over $1 million in debt inside of 15 months of inheriting a large chunk of money. So what is the second big mistake that people make that I have seen as a 25-year financial professional? Lack of knowledge when it comes to money and investments. That's what I've seen. I've seen a lack of knowledge. That lack of knowledge does two things. It will put people in and out of investments at exactly the wrong time. And then two, they don't have an actual plan put together that has actual goals. Here's how much I have. Here's how much I'm saving. Here's how much here's how I'm going to invest that money. I would like to have these goals met by these dates. That is a financial plan, folks. A financial plan has targets, specified targets, and it deals with how much you have, how much you're saving, and how you plan to invest. That plan will not only guide your life, but it will guide your investments. Okay, Derek, how's it guide your investments? I don't want to get too much into that because I want to hit the first story first. The abuse of time, believing you have more than you do or believing you don't have enough. But I can tell you this. How's it guide your investments? When investments are going gangbusters, let's just say in stocks, as they have been now since October of 2022, stocks have gone gangbusters. Okay? We all can agree on that. So is crypto. Well, when your stocks go gangbusters and your bonds get annihilated, if you have a proper financial plan set up, what's going to happen is some of your stock positions are going to get sold and you're going to buy into some of your bond positions. Guess what you're doing? You're selling high and you're buying low. The average investor will make that mistake time and time again. They will sell low and buy high. When they're scared, they sell. When they're excited, they buy. That is exactly the wrong way to do this. A financial plan will help you to avoid that mistake, because as if you're in a 50-50 portfolio, 50% stocks, 50% bonds, if your stocks get way out of whack, they're 70% of the portfolio. Now your bonds are 30% of your portfolio. What has happened here is that your stocks have done extremely well and your bonds have done poorly. So what it will do is at that high watermark, it will sell some stocks. And as your bonds are at a low watermark, you're going to buy them. It's getting you to sell high and buy low. Now you're trading like a professional. Whoa. And all of that came from having a financial plan that says, I have X amount of dollars. I'm saving X amount of dollars. I would like to achieve X amount of goals. And here's how I'm investing the money. And then the next thing you need to know is, are you investing in an IRA? Are you investing in a Roth IRA? Do you have a SEP IRA? Like, how are you investing your money? Because we also teach you how to optimize your investments, which brings me to my next point. For the next 72 hours, I have an Invest Like a Pro course. That is 25 years of knowledge, everybody. It will walk you through the history of Wall Street. How was Wall Street created? It will walk you through, how do you invest your money? What's the difference between Roth IRA, regular IRA, SEP IRA? How much insurance do you need? Should it just be a regular taxable account? What's the difference between a trust and an individual account? What's the difference between an individual and a joint account? How do you set up your beneficiaries? Then you will set up your investment. You'll come up with your financial plan. Hey, I have $50,000. I have $100,000. I have $1 million. I have $10 million. I save X amount per month. Here is how I invest it. These are the goals I'd like to reach. It will use a Monte Carlo simulation, which is basically a probability analysis of your life, your inputs, and how the stock market is traded over the last 200 years. It'll mix that all up, and it'll give you a probability of the likelihood that your financial plan will succeed. For example, if you're overly successful, 99% of the time you succeed, you might be taking too much risk. You're saving enough and you have enough that you're probably taking a little risk. If you want to take some risk off the table as far as your investments go, it'll drop that down to, say, 85%, which is about where you want to be. Anything over 80% probability of success is great, right? Or it comes back and it says you have a 50% chance of success, and you have that you want to be a conservative investor. You want to take no risk. Well, you bump that up to a balanced investor, which is 50% stocks and 50% bonds. Guess what? All of a sudden, you have an 85% chance of success. My course walks you through that. My course is 70 pages. It's a 70-page workbook with 7 hours of video tutorials on everything you'll ever need to know about in all the software you need to set up a proper financial plan, to learn how to open your own account, how to fund your own account, and what type of account you should have set up. All right? 7 hours of video tutorials, 70-page workbook to go right along with that. It will walk you through from a person who knows nothing about financial planning and investing to someone who is doing exactly what any financial advisor out there is doing for you. All right? Most advisors charge you 1% on your assets. What's 1%? If you're at $20 for this course, so if you had $2,000 and you were working with a financial advisor, after 1 year is your break even. This course traditionally costs $497. Why do I have this course listed at $20? It's simple. It's a 72-hour sale. It's 96% off. I don't want anyone to ever say that they have an excuse on why they don't have a plan set up, why they don't know anything about investments, why they don't understand how they're investing, and why they don't understand what their investments are going to do for them over time. All right? At $20, you can't miss. That is 25 years of knowledge wrapped into 7 hours of video tutorials and a 70-page workbook that walks you through step by step from someone who knows nothing to someone who is now investing their money the same way any financial advisor at Merrill Lynch, Wells Fargo Advisors, Smith Barney, Bank of America, you name it, anywhere, they're going to do exactly what you're getting from me for $20. And a sixth grader can learn how to do this in give them 2 hours. A sixth grader could do this in 2 hours. Then why is there 7 hours of video tutorials, Eric? Because I want you to educate yourself. Learn the difference between an IRA and a Roth IRA. Learn where you should put your money first. Learn where it should go second. Learn about asset allocation. Learn the difference between a growth portfolio and a balanced portfolio and an income portfolio. I want you to learn this. I want you to understand it. Now, many people come back to me and they say, Derek, while I love the course, it was amazing, and I walked through it, I'd like you to do this for me. I'd like someone that has expertise and knowledge, 25 years of knowledge to be specific, to look over this and monitor this for me. And I do offer that as well. That's a service that I offer. And that's not a problem. And there's a lot of reasons people do that. Sometimes people are busy. But this is where you start. And if you are a person that's not in a position to hire someone, and I don't charge a percentage on assets, by the way. I charge for a working financial plan each year. I stay up on it. I check with you. Why am I beneficial? Well, it's real simple. After 25 years, I've looked over 1,000 different lives. I've looked over 1,000 different mistakes. I've looked over 1,000 different financial lives. I can see mistakes coming that you won't see coming simply because I've looked over so many more financial lives than you have. All right. So listen, I'll talk about that again, but let's get back. So we're talking about the major financial mistakes that I saw over a 25-year span in finance. First mistake is time. People think that they have more time than they do, or they think that I'm out of time. I have no time. I'm screwed. I have messed everything up. I have not saved enough. It's over. Let's address number 2 first, because I think in today's economy and in today's world, number 2 probably means more. Number 2 is probably more applicable to today's situation, where people are afraid that they haven't saved enough. They haven't invested wisely, and they don't have enough time. Let me break this down for you folks. So you're 45 years old. You have $100,000, and it could be $50,000. It could be $25,000. I want to demonstrate to you what time can do for you with money. And the reason that you don't need to believe these guys online that are telling you, I do 70% a month. I do 50% a month. I'm a 20-year-old, and let me tell you, I use a prop firm so I can take my $500 and I can leverage it, and I can invest $100,000 a month. That's people. If you're listening to these types of people, you're looking to skip steps. You're looking to make one of the most major mistakes anyone can ever make, because there's no shortcuts in setting yourself up financially. There's no shortcuts in setting up your investments. So let's talk about time. Time in investing is based on a rule, all right? Laws. Everything has laws in the world, right? So we have the rule of 72. What is the rule of 72? The rule of 72 simply states that you take the number 72 and then you divide that by what you're making in interest or capital gain. So, for example, the average stock market return is 10%. You make 10% a year. Therefore, your money doubles every 7.2 years. Let's just say it's 7 years for argument's sake. So your money doubles every 7 years. Now, let's say that you decide you are going to start to educate yourself. You are going to start to pay attention to your money. You are going to start to learn a little bit about how the stock market moves. And after you learn, very little, you realize that something that's probably not possible is making 50% a month or 80% a year. Probably something that's not possible, right? Maybe not for you. There are professionals, I'll tell you, and those professionals, when I say professionals, they don't manage anyone else's money. These guys are not out there. You're not going to find them online. There are guys out there that manage to pull that off every year. And there's a lot of reasons behind that, and I'll discuss that. But you're not going to find them online, and they are certainly not teaching you how to do it. And they're very quiet about the fact that they are doing it. So we know that's not true at this point. And these guys, by the way, have spent 30 years. Most of them are professional traders from the pits that then get out of that trading atmosphere. They go on their own and they're able to do that, right? These are not normal people with normal jobs. These are people that spend 100 plus hours a week for 20 years before they ever attempted to make those returns. So we realize we can't make those returns. We're not going to make 80% a month. We're not going to make 100% a month. It doesn't matter if we're trading futures or options or what we're doing. We're not going to be able to do that. That's just not possible. But what we do think we can do is identify major points of inflection, meaning if there's a big bear market coming or we see a lot of problems in the economy, I mean big problems, we think we can probably avoid those big problems. If you believe you can do that, and I'm here to tell you, you absolutely can do that. I don't care what your profession is, you can absolutely avoid major bear markets. And I can tell you what that will do for your return. On average, avoiding those major bear markets is going to make you average, instead of 10% a year in the stock market, you're going to average about 20% per year. How can I make that statement? Really simple. Most stock market declines are about 50%. Bitcoin declines are much, much more. And this definitely applies to cryptocurrency too, everybody. I hope you know that. This applies to cryptocurrency. So please acknowledge that. Anything I say about stocks and bonds applies to crypto. So the market's up, okay? You now have $100,000. The market drops 50%, all right? And you go with it. You believe that you get your money, you invest it, and you keep it invested. You're in all stocks. You have some crypto, you have some bonds, you have some gold, whatever. Your account falls 50%. So now your 100,000 goes to 50,000. Okay? Now the market rallies. What? Let's call it 80%. The market rallies 80%. What's 80% of 50,000? Because that's what you have now. 100,000 falls in half by 50%. You have $50,000. That $50,000, the market rallies 80%. Guess what? You have $90,000 now. You don't even have your original investment because you're sitting through a bear market. You're sitting through it. Fell 50, rallies 80. You're still short 10% of your own money. Now, look at this. I'm not saying you're going to miss all of a bear market. I'm not saying that at all. All right? You're going to get hit by bear markets to a certain extent. To what extent is up to you. So here we are. We have the same $80,000 and the market falls 50%. But guess what? You saw it coming. You know how to cover your positions. Cover your positions means like neutralize them, right? So eliminate some risk. Maybe you buy some shorts. Maybe you sell some of your positions. There's a lot of different ways that you can start to go market neutral or kind of market neutral, right? So the market falls 50%. You have $100,000. You lose 20%. So 30% of the market drop you avoid, but you still lose 20%. The market falls to $80,000. Now, the market rallies 80%, just as it did in the first example. You just made, what, 56,000, or is that 66,000? 16 off of 80 is 64. You just made $64,000. $80,000 plus $64,000 is $144,000 here, $90,000 there. Here, you just managed to miss about half of the bear market. Half, that's it. Over here, you rode the entire bear market down. Okay? So you missed a major bear market. You have 144,000, 90,000. This is possible, folks. This is possible. So let's talk about what that means for time. Here you are. I don't have enough time. I'm screwed. I'm 40 years old. There's nothing I can do. I have $100,000. What am I going to do? I'm 45 years old. There's nothing I can do. Well, you educate yourself a little bit over the next year, and you say there is a way to avoid most major bear markets. You realize that by avoiding those major bear markets, you're going to make 20% in the stock market instead of 10. You're not a superhero, by the way. You're making 20% instead of 10. You apply the rule of 72, and that means that about every 3.5 years, your money is going to double. Every 3.5 years, if you're invested in the stock market and you avoid most major bear markets, you are going to double your money every 3.5 years. You're 45. You know the reality of the situation. You cannot retire before 65 or 70 nowadays if there's any such thing as full retirement anymore. And I don't know that there is, and I don't know that there isn't. But I'm just telling you, if someone asked me what I thought, I would say I highly doubt that there is going to be full retirement anymore. But every 3.5 years, your money doubles because you're making 20% a year. Here we go. $100,000. You're 45 years old. You have 7 flips to get to 70 years old. your money will flip 7 times by the time you hit 70 years old. So that's what we'll go with. We'll say you have to work to your 70. You have $100,000. So every 3.5 years, that means you have 7 times your money's going to double. So ready? 100,000, 200,000, 400,000, 800,000, 1.6 million, 3.2 million, 6.4 million, 12.8 million, $12.8 million. Are you out of time if you are 45 years old right now and you have $100,000 that you're not going to withdraw, you don't have to spend, and all you do is learn how to avoid most major bear markets? No, you are not out of time. You're not out of time and you're not in trouble. The major mistake I'm seeing today is people that think they're in their mid 40s, early 40s, late 30s with small accounts. They think they're out of time. Out of time for what? You have 25 years, okay? You have 25 years to go. You could take $100,000, avoid most major bear markets, $12 million by the time you're 70 years old. I don't care what happens to inflation. If you get to 70 years old and you have $12 million, you're going to be okay. Now, what happens if you don't learn anything and you just ride the market ups and downs and you're completely asset allocation? You have some stocks, you have some Bitcoin. If you're doing that and you include Bitcoin over the last decade, it really bolsters that 10% to a pretty high amount. And I do encourage everyone to own some Bitcoin, by the way. But it really bolsters that 10%. And I'm not going to do that. We're just going to pre-assume 10%. You own some stocks, bonds, gold, some metals, some commodities. You own some crypto. Maybe you own some coins. I don't know. But you definitely own some Bitcoin, right? We're going to assume that your money can flip 4 times, all right? Right now, 4 times by the time you're 70. So you got $100,000, you're 45 years old, you think you're doomed. 100,000 to 200,000, 2 to 4, 4 to 8, 8 to 1.6. You have $1.6 million by the time you're 70 years old. All right. I know that might not be what you want to have, but you're not out of hope, for goodness sakes. You shouldn't start trying to look at guys who are going to teach you how to day trade and make 80% a year. That's ridiculous. That's not going to work. I have been doing this for 25 years, and I do understand futures. I do understand options. I do understand the stock market. Let me tell you something. Really, even if you're really good, as I am, at market ups and downs, you have to have a pretty sizable account to get in and work in futures and think you're going to make it. Because as volatility increases, and we are going to see a volatile environment moving forward, far more volatile than the markets have ever been before. We're going to see a far more volatile market moving forward for the next 20 to 30 years than we've ever seen before. That volatility makes small accounts impossible to utilize futures. It also can be extremely damaging to bondholders. However, if you are in fact a professional, if you've been doing this for 20 years, this is a good time to be alive, because that volatility won't hurt your account. It will help you make money. But for the rest of you, it's going to hurt you. Point being, are you out of time? You're not out of time. You have plenty of time. And that is why I am offering my Invest Like a Pro course at such a discount. I'm offering this course at 96% off for a reason. It takes you from knowing nothing in investing to doing exactly what any financial advisor at Merrill Lynch, Wells Fargo, any of those will do for you for the cost of $20. You will learn and get access to all the software needed to set up a financial plan based on Monte Carlo simulation. You'll learn the history of Wall Street, how it works and why it works the way it does. You'll learn how to set up your account, what type of accounts to set up, how to place a trade. You'll learn at the asset allocation models, how they work and why they work. And then you'll learn how to rebalance your account every 6 months. All of that for $20. I sell that course at $497 all day long. Why is it $20 for the next 72 hours? Why? The reason it's $20 for the next 72 hours, I don't want anyone to have an excuse as to why they don't have an amazing financial plan, why they don't have an investment plan put together based on something that will work for them. All right? Based on something that works for them. Now, people hire me to do their financial plans for them all the time. Reason being, I've been in the business for 25 years and I've looked over thousands of financial lives. Sometimes I can spot mistakes before they happen better than the average person can. Why? Because I've looked over thousands of financial lives. You've looked over your own. Now, I'm going to take that down. This is not me just pitching you all day long, but I assure you that course will be on sale for $20 for 72 hours or for the first 1,000 people that buy it. After that, I promise you that course will be $497 again. However, I'm going to take it down because what we want to talk about now is we want to talk about, so that's the people that don't think they have enough time. That's the people that think, I've run out of time. I'm doomed. I'm 45 years old. I have a $100,000 account. I'm in trouble. This isn't going to work. Now, what I want to talk to you about is, and who I want to talk to specifically are younger people that are much younger. You're in college. You're coming out of high school. You're in high school. You're in your mid-20s. You're in your late 20s. I want to talk to you right now about what time can mean to you. Because what time can mean to you is everything. You're so young that you don't have to do much to do very well for yourself. Let's take an 18-year-old right now. He works a part-time job. He's going to college, or he's not going to college. He's going to a trade school, or, he's working for a union. He's becoming a journeyman, whatever he's doing. And this person is merely saving $1,000. Well, let's even make it less than that. Let's say that you're saving $100 a month. You're saving $1,200 a year. All right? $100 a month. You have $5,000. Well, it'd be $6,000, I suppose. You'll have, going through college, 4 to 5 years, I guess, for college. We're just going to say from 18 to 23, you're saving $1,200 a month, okay? So you have $6,000, all right? Let me show you what time can do for you. You don't know anything about investing and you don't care. You buy my course for $20. You go into a basic asset allocation model, set it and forget it. A balanced portfolio, 50-50 stocks and bonds. You know that you're going to work to 65, 70 years old, just as the rest of us are. You listen to me speak, so you know the rule of 72. What's the rule of 72, everybody? It's the most simple rule in history. You take the number 72, you divide it by 10. That's how often your money flips. So you're going to buy this financial planning course. You're going to go through it. It's so easy. A sixth grader can learn it in about 2 hours. You could have your money invested in about 2 hours, and you'll be doing exactly the same thing that any financial advisor at Merrill Lynch, Smith Barney, Wells Fargo, Bank of America, any financial advisor, Raymond James, Edward Jones, A.G. Edwards, you name it. You will have the exact knowledge that they have, and you'll be doing exactly what they do for $20. So you know that your money's going to flip just about every 7 years. You are 23 years old, all right? So you have, let's just say that you have 7 times 6. We're going to say you have 42 years in front of you. You have 42 years, which takes you to 75 years old. 42 because it's an easy number for me. Come on, give me a break, all right? Your money's flipping every 7 years. That means you have 6 flips in your life. All you have is $6,000. That's it. That's all you have. You saved $100 a month. Now watch this. Your money's going to flip 6 times. So you now have 6,000. Your first one, 12,000, 24,000, 48,000, 116,000, 232,000, and $464,000. That's $6,000 you saved is worth $500,000 by the time that you are 75 years old. Your measly $6,000 is $500,000. Now, if you think that that's not keeping up with inflation, you're going to love the beginning of my course, which is the history of Wall Street and how it really works, because average inflation is about 3%, slightly less if people are being honest with you. But you have $500,000. Now, what happens if you just do the right thing and save money throughout your life? So what happens if you save that same, $100 a month until you're 45 years old? Do you know the answer to that? My course will tell you the answer to that. What if you save that money till you're 30? What if you save that $100 a month until you're 50? What if you save that $100 until you're 55? Well, let me clue you in. If you keep saving that money until your mid 40s, you're not going to end up with $500,000. You're going to end up with 30 million or so, 35 million or so. That's what's going to happen to you. At $100 a month, starting at 18 years old. Time is your friend. Oh my God. What is $100 a month? You guys are going to the bar, you're going out to eat, you're doing what you're doing. I was your age. I know. And I made this mistake. 25 years in finance and investing. And I made this exact mistake. I knew to save $100 a month and I didn't do it. I kick myself now for it, which is why I'm so passionate about you doing it. Because $100 a month until you're 45, you're sitting on $30 to $50 million by the time you're 75 years old. Oh my God. For $100 a month, for one night out that you don't take, right? For one round of drinks, not even a round of drinks. You go to Vegas, what is that? That's 8 drinks. You go with 4 friends, you're done. That's your $100. That $100, if you save in a month until you're 45 years old with a balanced investment in Bitcoin, bonds, stocks, and commodities, you have $30 to $50 million. That's amazing. That blows my mind. Listen to me. I am a professional and I've been doing this for 25 years. And when I say that out loud, it blows my mind. That is exactly why I'm offering this course that is usually $497 for $20. 96% off, 7 hours of video tutorial with me. It's not slideshows. It's not done with AI. It's me walking you through it. What account should your money be put in? Where should you be saving your money? When should you plan on taking money out? What is an asset allocation model? How do I set it up? How do I set up an account? How do I place a trade? How do I create a financial plan that has a starting point and an ending point using Monte Carlo simulation, which is a simulation that mixes up the stock market returns and it mixes up the events in your life that you input. It mixes them up 1,000 times and it gives you the probability of success. Why am I offering that for $20 over the next 72 hours? Because you can answer all these questions for yourself for $20. You have no excuse not to do it. You will have the same knowledge. You will do the same thing as any financial advisor that works at Merrill Lynch, Smith Barney, Wells Fargo, Raymond James, Edward Jones, AGOs, any financial advisor. How do I know that? I worked at Merrill Lynch. I worked at Wells Fargo Advisors. And let me tell you something. This plan doesn't just guide your financial plan. It guides your investment plan. This sale will be for 72 hours and 72 hours only, or the first 1,000 people that purchase it. I promise you that after that, that will be gone. I will not be offering this again, except maybe Black Friday. I might do a sale like this again on Black Friday. So for those of you that don't think you have enough time, you're in your mid 40s and you say, I only have $100,000 saved. I am screwed. I need to make shortcuts. I need to find that guy online that says he can make me 80% a year. Well, we just walked through your $100,000. And if you simply take that $100,000, avoid most major bear markets with a little education, you avoid most major bear markets, you end up with about $12 million by the time you're 70. And for those of you out there that are 18 years old, 22 years old, 25 years old, 29 years old, time is your greatest ally. Save $100 a month, put it into a balanced portfolio of Bitcoin, stocks, bonds, cryptocurrencies, currencies, not Bitcoin, currencies, so coins, commodities, you name it, put it in a balanced portfolio and keep saving that $100 a month until you're 45 years old. You're liable to end up with $30 million by the time you're 70, 75 years old. World will look a lot different to you with that kind of money. Why am I so focused on you setting up this plan? Why do I care so much? Let me tell you why I care so much. Because money in this world, I love all the stuff online that talks about spirituality, manifesting, karma, belief in yourself. I love it all. But let me tell you, you live in the human world. And in the human world, without money, life is much, much harder in every aspect. How can you say that? I'm joyful. I feel amazing about what I'm doing. Here's how I can say it. And here's why I say it. Go get sick. Now go get sick while being broke. Go on vacation. Now go on vacation broke. Try to build a business. Now try to build a business broke. I don't care. Try to live a healthy lifestyle. Now try to live a healthy lifestyle broke. I'm not telling you you can't do those things. What I am telling you is life is much easier if you set yourself up financially, and it's so much easier than you believe it is, which is why I'm on here trying to tell these stories, which is why I'm selling a financial course that is 7 hours of video tutorial, a 70-page workbook that I walked through. I gave you 25 years of knowledge, and it's $20. That's why I'm doing it. It's $20 for the next 72 hours or the next 1,000 people that purchase it. Share this knowledge with everyone you know, please. Please. When you click on that QR code, or if you go to my website, PrometheanInvesting.com, if you go to checkout, it'll say $4.97. Once you go to checkout, it will automatically discount it down to $20, by the way. So I hope that we learned something here as we talked about the rule of 72 and why, young people, time is your greatest ally. And for those of you that are like me with a family and maybe you didn't save appropriately and maybe you don't have that much money socked away, it's not over. It's not over. You have time to live an amazingly abundant financial life without trying to take shortcuts, without trying to find that guy that says he can make you 50% a year, without trying to find that guy that says he can make you 100% a year. For those of you that are just joining now, the reason we're talking about this is because that's a farce. You're not going to make that kind of money for yourself unless you worked in a trading pit. Maybe if you worked in the pits in bonds, stocks, commodities, that's different. You spent 20 years on the floor. You know what's going on. You get out. I'm not saying that even guarantees you that you're going to be able to pull those returns. But let me tell you this. These kids that are telling you to go to prop firms or that they know how to take $500 and turn it into $100,000 so you could trade that money. And they say, oh, look, you take 500 and you can now trade 100,000. Let me tell you where that goes wrong. Because I don't want you to make that mistake. Here's where it goes wrong. If I trade $100,000, how much money can I lose at $500? Anyone out there know? What is $500 to 100,000? It's half of 1%. If the market moves against you, half of 1%, you have lost all of your money. Guess what? The market moves against you 5%, you owe the firm $4,500. How many of you out there think you can identify a 0.5% move? Because I assure you, the best in the world can't do that. Not a 0.5% can happen in 10 seconds. If you think you're going to go to a firm or you think you're going to go to a leveraged environment, such as currencies, and you're going to take your $500 account and you're going to trade $100,000, you better hope that doesn't move against you half of 1%. Because if it does, you're broke. If it moves against you 1%, you owe the firm $500. You lost your $500 and you owe another $500. Avoid that mistake, everybody, and realize that you're not out of time. Second mistake that I've seen in my financial career over 25 years, that is one of the biggest mistakes I see, is inheritance. On both sides. I've seen couples that worked themselves to the bone and saved like you wouldn't believe. They're 70 years old. They have $5 million, $10 million, and this inheritance is going to their kids. And their belief is that those kids are going to take that money and they're going to use it as wisely as they did. I have to tell you right now, for any of you out there that's watching that might be a little bit older, maybe you're in your 50s, maybe you're in your 40s, maybe you're in your 60s, and you think that, oh, they have plenty of time to learn this stuff. Life moves really fast. And I'm going to tell you a horror story that's going to blow your mind. So this story is for two groups of you. This is for the group of you that are working your butt off and saving your butt off so that your heirs can have some sort of wealth. They can have a better start than you did. Maybe they can own a home when they inherit that money. Maybe they'll have a savings when they inherit that money. This story is for you. This story is also for you, those of you that believe you're going to inherit money. And this is a warning to you if you're going to inherit money, that you better understand money before you do it. So here we go. Here's the story, everybody. All my stories are true. They're all taken from clients that I've dealt with for 25 years. All right. And I have hundreds of these stories because I've been doing this for a very long time. This particular couple takes me back to 2007. 2007, I was working in Henderson, Nevada. All right. I was a financial advisor out there. I met this couple because I did a lot of prospecting. I was big cold caller, big door knocker. And I was big with going to businesses. And they happen to own 2 hotels. I know for those of you out there, you think, oh, we were in Henderson, so that's just outside Vegas. This couple there's a couple towns that are outside of Vegas, and people live and work there, and they own hotels. Why? Because when big conventions come into town, what ends up happening is Vegas gets completely booked, and people will look outside of Vegas for overflows. So they'll stay in these hotels that maybe they're not the greatest, but they're like your Best Westerns, your Holiday Inns. You're going to stay there because you're in Vegas for a reason, which is usually a convention. And a lot of those hotel owners do okay. They're not the Mirage. They're not, whoever you like out there. They're not Encore, right? So they're not these major hotels, but they do okay. But they're still working class people that have to work every day and they have to grind every day. This couple had 2 hotels. I went in, talked to them, They mentioned they're about to have a pretty large inheritance. That inheritance was a little over $3 million. It was $3.2 million. And so they said, we'd like to talk to you. So, we get a couple weeks down the road. They come in, they bring in their statements. They had managed to save between the 2 of them about $200,000 in their IRAs. Okay. They're in their young 40s. And the wife may have been in her late 30s. But anyway, let's just say young 40s. They're in their young 40s. They have about $200,000 there, and they're about to inherit $3.2 million. So as you can tell, if you save $200,000, in your young 40s and you have 2 young kids, you're doing okay. You're saving, you're doing the right things, you're working hard, but by no means are you in the stratosphere as far as your financial position, right? You're doing okay. But they're going to inherit a pretty big lump sum. So let me tell you what happened. So they come in, we get all the money transferred over. We set up a couple of trusts for them, their IRAs. We start to manage that money. And inside, it was fast. Inside of a few months, this couple had taken about $1 million out of that $3.2 million. They took about $1 million. They bought an RV for $500,000. They bought a couple pretty big sand rails, a couple $100,000, some trailers. And they had accumulated some debt when they bought this stuff. But the fact of the matter is this: life is about living, everybody. Life is about experiences. That's what you want money for. So if someone tells me that they inherited $3.2 million and they're going to go blow $1 million, I would encourage them not to incur debt while doing that, which this couple did. But I think it's perfectly reasonable to do that. And I don't believe in growing money for the sake of money. I believe money makes our life better. Our money gives us more freedom. It gives us more choice. It gives us the ability to create more freedom and more choice for our heirs moving forward. Okay. Inside of a few months, they went through $1 million. And I said, okay, you got to calm down. They're like, yes, we know. We got it. Blah, 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 blah. Fast forward 15 months later. They have spent all the money and accumulated about $1.2 million in debt. They were buying land. They were buying houses. They went crazy. They had spent the $3.2 million and they had accumulated about $1 million in debt. Their IRAs at this point were almost $300,000. They whittled that down to about $70,000. And that's when I told them they have to just take their money and go. There's nothing I can do for them. They've overspent. They've over leveraged. There's absolutely no way that I can help you. Because if you're going to spend like that and you're going to accumulate debt, you're in big trouble. And I just told you when that happened in late 2007. So what do you think happened to them? Right. I saw their hotels up for sale a few years later. And that's a terribly sad story. But why am I telling you this story? A, it's real life. That is exactly what happened. And B, I want you to realize that if you're going to leave money to your family members, you need to prepare them for what that means. They need to understand money. They need to understand financial planning. Okay? That's for you if you're leaving them the money. If you're someone that believes you're going to inherit money, you think you're not going to make that mistake, but here's an interesting fact for you. 90% of people that inherit money spend it within 18 months. Over 90% spend it within 18 months. It's something like 99% spend all of it within 3 years. It's because they're ill-informed about their finances. Again, there's nothing wrong with taking a little money and having some fun if you've been working hard and whatever. But you need to understand that money, because that money could have been life-changing for those two people. They never had to worry about money again. Even with the crash was coming. That was in 2006, 2007. That's when that happened. That market crash was coming of 08 and 09. It wouldn't have mattered. They had enough. They didn't screw it up. And what I want to do is I want to prevent people from making that mistake. I want you to understand money. So I am selling my Invest Like a Pro course at a 96% discount for the next 72 hours or the first 1,000 people that buy the course, so that you have no excuse for not having a proper financial plan. A proper financial plan. I have 7 hours of video tutorial with me talking to you just like this, guiding you through how to do a financial plan. I give you all the software you need, and it's all free. All the software you need to set up a financial plan online using Monte Carlo simulation. I walk you through what accounts to use and why. What's the difference between an IRA and a Roth IRA and a SEP IRA and a joint account and a regular account and a trust account. I walk you through asset allocation models, how they work, how you rebalance them, where you should be. Everything from I know nothing about finance to I am a financial advisor. You will be doing exactly what a financial advisor at Wells Fargo, Bank of America, Merrill Lynch, Raymond James, Edward Jones, A.G. Edwards, you name it. You will do exactly what they do for you every single year. Here's the thing. They charge you 1% on your assets. So a 1% fee on your assets. You have 50,000, you pay 500 a year. You have 100,000, you pay 1,000 a year. You have 10,000, or you have $1 million, you pay 10,000 a year. You have 5 million, you pay 50,000 a year. I'm giving it to you for $20, a 96% discount. It'll prove to you that you have the time and you should use it. If you're young, listen to me. Go spend $20. It will teach you the value of time with your money. If for nothing else, you will learn that. It will take you 1 hour. A 6th grader could fully understand how to do this in 2 hours. If you're in college, if you're in high school, wherever you are, you need to do this. This can protect you. If you're 45 years old and you think that there's no chance left for you, you're wrong. And this will prove that to you as well by guiding you through the rule of 72. For any of you joining me right now, the rule of 72 is very simple. You take the number 72 and you divide by your return in the market, and that tells you how quickly your money flips, how quickly your money doubles. So please, 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 if you think you're out of time, or if you think you have all the time in the world, you just wait another 5 years. Spend the $20. Take the 96% discount. It's going on for the next 72 hours. Or the first 1,000 people that buy the course. Whichever comes first. Click on the QR code. It'll take you to the page. It'll take you to the sales page. I'm using Square at the moment. I do have Venmo and Zelle options if you choose to use those. But if you want to go through Square and use your credit card, you're able to do that. PayPal, I do that as well. It'll take you there, and as soon as you click on it, it'll discount you down to $20. You have any problems, you reach out to me, dmiller@prometheaninvesting.com. dmiller@prometheaninvesting.com, and I'll make sure you get it for $20. All right, I'm going to jump off here for about the next 20 minutes. I'm going to get something to drink, and I'm going to come back, and what I'm going to talk about next is quite a bit different than what I've been talking about right now. What I'm going to talk about next is how you can identify and avoid major bear markets before they happen and protect your investments. And I have another special deal that goes with that. I have another course that typically costs $2,000. It also is about 96% off. And it is here to show you how to identify major bear markets. I'm going to be back in about 20 minutes. I'm going to start talking about that. I'll be on TikTok, LinkedIn, Twitter, Facebook, Instagram, you name it, I'm there. I want you guys to learn this. I want to help. Believe me, that is why I'm discounting this stuff to the rate that I am.